Good morning, everyone. I'm Martha Stokes, Chartered Market Technician. Today, we're going to talk about run gain potential. We have a situation with IBM where the HFTs gapped it down, and that was an error. And so it dropped below a buy zone, and there was some pushing price up. Pro traders got in because they knew that that was a mistake by the HFTs, drove it up, and then the next day it ran up again. So is it going to run up today or is it going to run up this next week? Well, you need to look back in time to consider the run gain potential. This is a critical aspect of swing trading, velocity trading, all kinds of different trading styles. Day trading even also can use this. You have to calculate how many points it normally runs on average, and you need at least 3 runs to average out to see the run gain potential. It's something I teach. And what you want to do is you want to calculate from the lowest low of the start of a run to the highest high or the close of the day of that run. And you would take this run and possibly this run. This is also a run, but it's getting shorter. And this is common when we go toward a resistance level, is to have the runs longer and then slowly get smaller and smaller and then very small, and then it tops. That's one of the things you should be identifying with your candlesticks. Oh, the runs are shrinking. Yeah. Now we have this big run down, and then we had a little tiny run up, and then this gap down by HFTs that made a huge mistake. That we covered. So that tells us what? It tells us that the fundamentals are in this level. Now it has gone up on Friday and gone way above that. So if you did the run gain potential from here to here, you would see that it exceeded the average run gain potential here. It's not how many candles, it's how many points does it move in a single day or intraday on the minute scale to tell you whether the run gain potential has, and it doesn't. It's lost its run gain potential. It's exceeded its normal range dramatically. Even if you were to take it from here to here, it's still it has to move sideways or correct slightly and then resume moving up. It had a good earnings report, and this is the day of the earnings report. It has some good flow coming into it, a little bit of rotation here, but not enough to significantly change it. IBM does have a new technology. It is catering to very large corporations, conglomerates, and mid-sized companies. It is a hyper automation of their IT department, which is a new type of technology. It is not hyper speed, it is hyper automating. In other words, gathering everything into one stream so that they can cut back. A lot of these huge corporations have hundreds of programmers and IT guys on staff, and what they need to do is really reduce that overhead, and they're doing that with hyper automation. That's what IBM is promoting. If we look at the weekly chart, we can see that it has a very strong upside potential out of a long-term bottom that slowly moved up over time. It was a really good investment way down here. If you were long-term, it was a really great investment, very low price at $120, $113, and has moved up steadily since then. Can it move up anymore? Well, we would look at our monthly chart to see where it's at, and we can see that did I click the monthly chart? That it is continuing to move up, and it has potential to continue to move up. So we have a lot of potential to the upside, but right at this point, if you're trying to get into this stock, it needs to, whether it will or not, is separate from what is happening. It needs to correct a little bit because it's overextended, and when it corrects a little bit, it will add more to it. Right now, we have an indecision day because it's intraday and we're just partly into the market and we're just moving forward on it. But these corrections are natural, normal, and necessary. And this was a huge mistake by JHFTs. I've mentioned it before. So run gain potential is critically important to evaluate how long and far the run will go. The other part is, where are the fundamentals? The fundamentals were here. So as soon as it started hitting in here, it corrected because it was going outside of the fundamental zone that was right in here at that time. And then it moved up speculatively, and then it collapsed because it had a weaker earnings report. And now it's moving back up again because its strength has returned. This is pretty normal and common. And if you were in this stock, you would see that there was slow rotation at this time. Slow rotation, slow rotation. The bad news or weak news, actually it wasn't bad, and HFTs gapped it down appropriately. HFTs were trying to gap it down here and failed because the earnings report was much better this time, so it can resume a long-term uptrend with corrections going on. For you swing traders, you want to get in at the lowest low or a nudge and then ride it up, but also be aware of where resistance is. And this would be a resistance level where it would halt and retrace slightly and then move up again. And then another resistance level, slightly retrace and go up. Run gain potential is very important because it tells you all about things that are going on with the stock as far as acceleration, velocity versus momentum. Momentum is the overlapping of stock of price day. So we have a nice white engulfing white, and then we have an indecision day that overlaps a little bit. Then we have another little push. We have a nice up day with a wick and tail. So there were profit taking by day traders that wasn't necessary. And we have another little overlapping candle. So the candles that overlap slightly are momentum runs. Velocity runs are where it doesn't overlap, but there's a gap between the prices day over day or minute over minute. And when you have velocity, it's going to move like a rocket, and it's going to keep on moving beyond expectations. So you need to place your stop losses. This is another area of huge mistakes that you are making, is percentage stop losses. You just let everybody know that you don't know how to place stop losses, because every order that the brokers have are lit before they're executed or filled. So they know and can see every transaction you on the public exchanges, and they can see the cluster orders. Oh, this guru is saying this and this guru is saying that. So there's cluster orders that form when you buy in groups. You must learn to trade independently. You must learn to rely on your own self-confidence and your own reliance. How do you gain self-confidence? By practicing on your simulator until you're successful. 75% is a good ratio to begin with. And also by understanding that there's far more to this than this. Oh, this is engulfing white, I'm going to get in. Oh, this big long candle, oh, I'm going to get in because it's going to go up. Oh, well, maybe you're late now. Today you are late because the run gain potential was exhausted, and it needs to correct either sideways or go down a little bit. Speculative runs can cause it to go even further. So if you were in here, you need to place your stop loss at the closest support level for your trading style. And that varies from person to person and your risk tolerance and also your trading style. A trading style is not is a formula for telling you how you're going to trade, a price range, all kinds of things. A lot of you try to trade strategies without having your trading style under control, and you can't do that either. You have to choose your trading style, then apply the strategies that are right for that trading condition and that market condition. And if a strategy is working for you and stops working suddenly, why does that happen? Because the market condition changed and your strategy did not. All strategies work in certain market conditions, but they don't work all the time. So you have to have your style, so you always have a way that you're approaching the market consistently over time. And some people like to have two trading styles, like swing trading when the market is moving with momentum velocity, and platform position style for when the market is moving in a slower pace with longer platforms and that type of thing. So the market changes all the time, and you need to be flexible and not think, oh, I have this strategy, it's perfect, it's been working for me, and then suddenly it stops and you wonder why. Well, that's why, because the market is constantly changing. We're going through major, massive changes right now. And so you need to keep up with what's going on, because if you keep trading like it's 1999, you're going to continue to lose money because it is 2025 and going to be 2026 very soon. So run gain potential. Stop losses that are not based on percentage, but by support levels based on your trading style. Trading styles, choose a strategy for that market condition and that trading condition. We're going to have some velocity and some momentum action going here because there's some excitement overseas about certain things that are going on. So you want to be ready for that. I hope you learned something today. If you have any questions, you can just text me and ask me what's going on, and I will answer it. Or if you have a topic you would like me to cover, I will be happy to do so. That's my topic for today. Trade wisely. Thank you for watching my video.